We're back here on First Up, the first stop in your busy day, and it's time to get some sound investment advice from our friends at the Unit Trust Corporation. We have in with us Portfolio Manager Justin Silva, and back in with us is the Assistant Vice President for Investment Management Services, Karen Gayadine Gosine. Good morning. Welcome.
Good morning.
And classroom is in session. Let me get my pen and paper ready. Okay, so the first thing that we want to do is get an outlook for the world economy as well as the local economy, and also factoring the fact that we have our budget reading coming up in about 6 days or so. So who wants to tackle that?
I'll start. Justin can come in at any point in time he feels like. Thank you for giving us the opportunity to once again connect with our unit holders, viewers. You know, uppermost in the minds of Trinidadians right now is really the 2011-2012 budget. And in order to understand what's happening locally, we think we need to show, you know, as you've asked, what is happening globally. We've seen conservative growth. Growth has been positive. But the IMF recently reduced their 2011 forecast for growth by just 0.1% to 4.3%. And the reason they've done so is that they have continued to see weakness in advanced economies. So in the U.S., during the second quarter of 2011 would have grown just by about 1% because the U.S. consumer is not back as yet. Generally, the U.S. consumer is what drove the U.S. economy. In terms of the Eurozone, we continue to see fiscal challenges across all economies, and Germany, which is the best performing economy in the Eurozone, is only growing again second quarter 2011 by just about 0.1%. If we were to put our focus on Asia, for example, we see where India, China are growing 7%, 9% respectively, but growth is slowing. In the emerging markets, Latin America in particular, Brazil, Mexico, and even Russia, growth is just between 3% to 3.4%. So we are seeing conservative growth globally, you know, but we are not seeing that sustainable growth just yet. But growth is much better this year than it has been in previous years.
Many of the pundits are saying, because I was looking at one of the business reports last night, in terms of the primary focus on the established traditional big economies, the US, many parts of Europe, the Portugals, the Greece that is in trouble. And they're saying with the shift to the BRIC countries, the Brazils, the Indias, the Chinas, many people think that although the growth is not as robust as they would like to see it, there is hope globally because we're seeing emerging markets doing really, really well, even with the consideration that some of their main export points, like the US, has not rebounded as much as yet. There is still so much growth we see in those emerging markets. How critical is that growth in those emerging markets for people's outlook globally?
Oh, it's very critical, actually. The emerging markets will continue to be the primary driver of growth for the foreseeable future. The question is whether or not the emerging markets and the emerging middle class in the emerging market could actually replace the American consumer and the consumer of the developing economies. And that question is probably up for debate. I think in the near term, it is going to be the recovery of the developing markets, which I think will basically point to a firm direction as to what the global recovery is going to be like, because right now, well, the thing is that the major stumbling block to, well, as Karen mentioned, is of course the recovery of the American consumer. But the major stumbling block that we see for the foreseeable future is, strange enough, the political willpower of North America to come to bipartisan agreement on certain issues, as well as that in Europe, with respect to Germany, and if they will actually pay the debts of their neighbors.
How critical is the next US election in this, given the fact that if Barack Obama stays, people are not certain that he can turn around the economy, given what his performance has been regarding the economy in the last 4 years, 3.5 years. If a Republican president goes into office, there's speculation as to whether that is going to make a big difference.
Well, the political dynamic is very important because the thing is you have a Congress which is actually controlled by the Republicans when you have a Democratic president. So there's a conflict right there. So whether they can come to agreement right now on certain economic issues is going to be a challenge. And whether or not they want to come to an agreement, of course, is a question which has to be asked. And the next election is important, yes, but I would actually say what is more important is how they actually how they negotiate their terms now.
Mm. In terms of the global economic recovery, I just need you to clarify this for me. You're intimating that it may depend on how well the BRIC countries continue to perform, but the combined strength of these economies somehow, maybe my arithmetic is wrong, but I don't think it's as powerful as that of the US or Europe. And if those countries continue to decline, that's going to impact everybody else's potential for growth and development. So how, in light of that kind of a possibility, I mean, how do we really manage?
Well, growth in the emerging markets have slowed down, but they are still positive. So what we are going to see is a protracted area or protracted time frame of slow growth going forward. So it's not to say that overall the global economy will retract, because if we go back to the IMF forecast, you're still seeing 4.3% growth.
What about our local economy now? We're looking forward to the budget on October 10th, which the finance minister has said is a stimulus budget aimed at stimulating the economy from a really slow period. We have inflation, I do believe, at 6%, which some people, about 6%, 0.6%, sorry, which some say is not as good as we want because it's as a result of inactivity as opposed to activity. So what are the prospects in terms of investors looking forward to the budget and what the next year can yield?
Okay. In terms of TNT, what we have seen is that the central bank forecasted GDP growth at just about 1.2%, and the actual forecast for inflation is just about 4%, with unemployment of 5.5%. Now, inflation figures have come down. There has been some inactivity, but when you look at what drives inflation is really food prices. And if you look at the central bank media release as at September the 30th, we saw a reduction in meats, fish, vegetables. However, we saw some increase in prices of bread, cereals, sugar, confectionery products. But
reflecting
overall,
what's happening on the international commodities market.
Yes.
Correct.
So overall, inflation is down, which is good. In terms of the inactivity, what we did see is up to June, the central government accounts were in surplus, just about 1.2 billion or 2.5% of GDP.
Which means that they hadn't been spending on the PSIP.
Yes. However, thereafter, the September central bank report indicated that there was a buildup of liquidity in the commercial banks. And as a result of that, the result of that buildup in liquidity was because there was increased fiscal injections, as well as there was increased spending. So we expect the government to spend. The fact that they recently, as in early September this year, went for an increase in the debt ceiling, where they can now borrow internationally as well as locally, we anticipate going forward for the government to be spending.
How important is it for that consumer confidence to really kick into high gear? Because given what everyone has been seeing in the global economy, which we know is directly connected to how our economy is doing, people have been internationally and locally quite timid about making new investments, buying homes, purchasing cars, and that may have contributed to some of the liquidity at the commercial centers. How important is that the reinforcement of that consumer confidence?
It's very important, especially from a standpoint of Trinidad, where we just came out of a period of fiscal consolidation. That was our policy for the last fiscal year or so, where basically your government is trying to match your revenues with your expenses. And we saw during that period, we saw unemployment rise from a level of about 8.8% last year to a level of about 10% this year. Arising out of that, naturally, we did see some level of inactivity, as you referred to. But what the major driving force in our economy, while the consumer is important, the major driving force is our government and government expenditure. Trinidad's government is historically big in that it is the biggest foreign exchange earner, it is the biggest revenue earner, and is therefore the biggest spender. Which is why it's very important for the government to flex its arm, at least we hope, in the coming budget. The minister, sorry.
With that said, we have 90 seconds left, and I don't want to leave out what the investors should be looking at.
Sure.
In terms of really getting an idea of looking at the budget and seeing where we should be placing our eggs in a diversified manner.
Sure. Sure. We're just going to cover the overall principles, and we will discuss the actual strategy in the coming 2 weeks. But the basic principles, of course, will be for the investor, the sophisticated investor, right now at this time to plan for his strategy in light of the upcoming budget. So, it'll, of course, be to review his investment objectives, to review his timelines, as well as his inflation and interest rate outlooks. Of course, adhere to the basic principles of diversification with international markets as volatile as they are, and with a lot of uncertainty on our own side. You will want to ensure that you have your securities diversified from an issuer standpoint, regional and sector standpoint.
So certainly if the government is spending and they are using the financing mechanism of government bonds, there will be fixed income opportunities in the local market. Again, if they are spending, that spending will rebound to certain sectors in the economy, so certain equities, certain stocks will become attractive. So we can discuss it further in the next 2 weeks.
Okay, we're looking forward to have you guys back in a couple of weeks here on First Up.
Great, thank you.
Okay, and we're going to be going straight to the newsroom now to link up with Stacey and Providence to get the latest news from the CNews Center. And then we continue with First Up after that. Don't go far.